Okay, good morning, good day, good afternoon, depending on where you're at in the world. This is Wolverine for Salvation Trading Company, and where we teach you to trade Forex with realistic outcomes using proven price indicators and cross-pair analysis. Now, at any time, feel free to come to our website at salvationtrading.com. There you can see all the follow-up screenshots for the month and throughout the year, well, the follow-up screenshots throughout the month, and you can see all of our PIP results throughout the year and last year as well, where we show you both the positive and negative trades that we take. Now, this is a follow-up from the week of April 23rd, 2012. Where we have taken 8 trades. 2 of them were channel break trades, and 6 of them were MACD scalps. All right, out of those 8 trades, all were successful for 209 pips. And so I'm going to highlight one trade that we took here on a scalping trade using the 1-minute MACD. All right, now this is from April 23rd, and here I'll show you real briefly how we trade this off the 1-minute MACD, and see if this will help you in evaluating this type of trading strategy. I've been using this strategy for about 14 years. It's been very successful for me, so I'd like to share this and see if it's something that makes sense with you, the type of indicators possibly that you like to use. Now, one of the priorities that we use here, we use mainly 3 different indicators. One is knowing where resistance and support levels are going to be. And everybody, once you've been in trading Forex for any amount of time, the question is, if I only knew where resistance and support was likely to be, or if I knew where price was going to stop, if I had a really good idea where price was likely to stop and hold, stop and retrace, I could then excel in my trading. Well, if that's you, this is probably a trading strategy that you would really enjoy, because it's exactly what we do. We show you where resistance and supports are at. For instance, where I just marked on this euro dollar, we have resistance support at 31.23 and at 31.07. Now, again, you can see price, as price moved, you can see how it stops at this resistance support level, and then it stopped here and broke through. And this is the trade we took on the break, on the channel break. I'll show you how we did that in a moment. But also notice at next level of support, where did price go to? 31.07, and it held right here at 31.07. So again, and these are not lines that were just plotted in after price got here. These are resistance support levels that all of my clients receive 24 hours in advance. So you already know where the probability is that price is going to test. All right, and just knowing that gives you a huge advantage. And this is how the hedge fund companies trade too. They know where these resistance support levels are at, and that's why price stops there, because this is a known area by the big players, and we're just following their footsteps. So in this case, and this is just a bit of a modification of our standard channel 1-minute MACD channel trade, where we typically trade within the channel. In this case, we were taking advantage of the market been testing this 31.23 for a few days. So and it's been a big pivot area, and we've just been observing that. We're talking about that in our webinar, how this is an area that's up, price always comes back to, whether it's above 123 or below 123. So in this case, all of our indicators lined up for us to give us a really high probability that price again was going to come back and test 123. And the way we know this, we just follow through our really quick rules of engagement strategy. One is price trading with the 5-minute trend line. Well, here this blue line is our 5-minute trend line, and you can see indeed the 5-minute 60 SMA. Yep, that is trending down. So we are trading with the trend if we want to short this. And then secondly is price testing known resistance or support. Well, in this case, we've tested 3123 previously a few times here, and we know that it does hold only because we haven't had enough momentum for price to break through that support, because when we come down here to test this, our MACD lines were starting to turn back up. And if they're turning back up, then you're not going to have much of a likelihood of breaking through that support. And that's the other key indicator that we use. We have our price resistance support, we have our trend lines, and then we use a MACD indicator with some inputs that I provide that give you a very good reliability of where momentum is, when in particular into that moment of time of the pair. And knowing that helps us to know whether we're ready to break support or if we're going to bounce back off of support. In this case, we went long off of support because the MACD told us we weren't ready to short. And you'll notice the MACD, we use a multi-line MACD, which you can easily get even if you're using MT4. We have a download for that. It's real easy to put into your expert advisor. And by using that, you can see you have a fast-moving average, the red line, and the slow-moving average, the green line. And we'll explain that in a moment as well as we go through our rules of engagement. We've already identified that we're trading with the 5-minute trend. Price has already tested known support here a couple times, and now we're above it. All right, and now the 1-minute MACD, is it converged at extremes or testing the zero line? Well, here we are again coming down, testing the zero. We were up at upper extremes up here, and up at 004, up at upper extremes, and we know that if we're at upper extremes, more than likely we're a bit overbought, and the momentum will have to start to move back down. And so we wait for this crossover to develop. Here's our crossover, the fast-moving average, the red line, crossing over the slow-moving average. And as soon as we get that crossover and a bit of divergence, and here's confirmation of the divergence on the histogram, you can see how these bars are getting longer and longer below the zero line. And once we get that crossover, we know that we're starting to have momentum pull price to the short side. In this case, we waited for price to get below the 1-minute trend line, which is also now trending down. Okay, that's this orange line. That's our 1-minute SMA. As soon as we broke below that 1-minute SMA, we knew that we had a good opportunity for the market to, again, bring price down to 123. And we took this a little early because typically on our channel break strategy, or using the 1-minute MACD, is wait for price to break the support. Well, in this case, we were relying on the market pulling it right back down to support, and we knew that if we got in early enough, if we got in here at 31.31, that we felt that we could manage the trade once it hit support. If it started to bounce off, we could still get out with a positive pip production. So we entered in at 31.31 because, as we go through, our rules of engagement, the next question is the 1-minute MACD cross a fast-moving average? Is that crossing over the slow-moving average? And that's what we determined here. Yes, we are. Fast-moving average crossing over the slow-moving average. See how price also turns down because of that momentum pulling it down. Broke the 5-minute trend line, and then it came back up to test the 5 and broke the 1-minute trend line. When that happened, the MACD lines were still breaking short. See, the fast-moving average converged again right at the zero line and then started to come back down again. That gives us confirmation that we're getting more sellers than buyers in the market, and that gives us an idea, the thought that we probably will come down and test the 123 again. And in that case, like I said, we can manage this for positive pips of whether it's going to break through or will it bounce back up. If it starts to bounce back up, if these MACD lines curve back up, then we would just get out of this trade with a small positive pip. But in this case, if sellers bought on this and started chasing the trade, that's good because we're then ahead of the trade. We're in the lead position, and that's where you want to be. And that's why we have this the strategy is designed this way. Because in this case, when price came down to support, there is still very good support here at 123. You can see how price, moved back and forth here, trying to deliberate whether or not we were going to start to sell off a bit. And in this case, the MACD lines gave us a good indication that, yep, we have good divergence here. Look at the divergence between the two fast-moving average and slow-moving average developing here. And again, our histogram is, showing, confirming that. We're getting all the bars getting longer below the zero line here. That's very important. Divergence equals price movement. And once we break down through support, this is where the sellers come in and they start buying this off. And that's what we want to see, because we are now the lead dog in this trade, and that's where you want to be. You want to be in the lead. Let other traders come in and chase the trade, because if you're ahead of that, then it's like catching the wave. And if you're on the big wave, let other traders chase your trade down. So in this case, as soon as we can get our first 10 pips, that's the exit strategy we use. As soon as we can get our first 10 pips, remember this is a scalping technique, so we're just getting our first 10 pips here. So 31.19, we're able to take our first 10, so we take our first 12 off here, and that way I'm covering my spread and a little bit more, and then we take a big position off. I need to take about 2/3 off. If you're running single lots, you can take 2 lots off, let 1 lot run. The key here is moving your stop now to +1. All right, so now my stop has moved up here to +1. So now if price did change and it turned back up and stopped me out for +1, I not only covered my position and protected the pips I already have, I also got +1 on the remaining. So I'm going to be in a winning position no matter what. In this case, because we covered our position and we just monitored the position, the remaining position, and because the goal is to see if we can get down here to the next support. And where did price go to? Right down to the next support, 31.07. Again, this line has been, my clients had this 31.07 on their data sheet for about 3 days. They knew that that was there, and there was a good opportunity price would come down there. And that's exactly what happened. And you can see our MACDs bottomed out. Remember, they were up here at upper levels. Well, now when they get down to the lower levels, we should expect the same thing to happen. Now where we were overbought up here, now we're oversold down here, and there's your MACD transition again. Fast-moving average now turning up over the slow-moving average, and it's happened to happen right at, or happened to occur right at support. So we took our remaining position off at 31.08 because we're at support. MACD lines are telling us we're oversold, and now we're starting to get more buyers than sellers in right at support. Time to get out of the trade altogether. So we took the remaining off. Now here's the timestamp on this, because this was a live trade that we took, and so you can reference this to the time and see where we entered our trade, where we took our first position off, and then when we took our remaining position off at 31.08, and it ended up for a total of 23 pips on that trade. Again, using just 3 indicators that have been out there. Most of the indicators have been out there with your broker for years. They're easy to use once you have them plotted in here. And the resistance support lines I provide, and they're very reliable. All you need to do, again, if you just go to the website, www.salvationtrading.com, you can look at all of the screenshots, the follow-up screenshots, in much more detail and see how reliable those resistance support levels are. You can also then, there's a place there where you can request to join us for a 10-day free trial, no obligation, and where we will have webinars the first 2 hours of each market session every day, where we provide training, setups, trade setups, and as you can see, we take live trades. Again, feel free to come to our website, salvationtrading.com. We'd love to have you there. Come in and see how the strategy works, see if it's a strategy that meets your trading personality, and no obligation, and we just like to see you there and see how you like the strategy. So feel free to come in, sign up for the free trial. We hope to see you there. And then feel free to mark subscribe to this YouTube channel. That way any new YouTube videos that I post about twice a week. You will get those so you get a better idea of how we trade. All right, God bless and trade safely, and hope to see you there. Again, this is Wolverine. Thank you for your time.